You've made no changes when it comes to being overweight on China. Can you explain that call to me, given we continue to kind of watch very carefully when it comes to any kind of narrative that changes COVID zero, but clearly this is going to be a medium-term bet and timing will be crucial.
I mean, you are exactly right. I think timing is crucial. And in fact, like we had our annual China conference last week with about 2,500 participants in there. And I think that the single most question, the key question from clients was the timing of the zero COVID policy and when that comes through. And I would say, look, I mean, the market already got a little bit excited about potentially sort of a faster reopening in China, and assets did react. And so we saw China rallying almost 15%. We saw Hong Kong rallying 10-11% from lows. Our own sense is, look, that the timing for sort of full reopening will more in the second quarter of next year, partly because of the healthcare considerations, partly because of political considerations. But that's what our timeline looks like. And maybe the market kind of anticipates that a little earlier. And so our sense is that whenever there is a full reopening from China, it could give a valuation relief rally of around 20%, more so in the reopening related stocks. And I think that is part of the argument for being more positive on the offshore stocks, where valuation looks very cheap at 9 times forward earnings. I think having said that, I think there is a better structural case for onshore stocks, because most of the market there is much more geared towards sort of common prosperity and sort of the policy beneficiary areas. But I would say for us, onshore Chinese equities is more a structural medium-term bet, whereas the offshore equities is more a reopening trade from low valuations.
All right, interesting. Yeah, perhaps a little less of a risk hedge there. In fact, we're getting the latest numbers out of Beijing as well, reporting 114 new local COVID cases for November 10th, trending in the wrong direction, certainly. 59 that we saw in the previous day, 95 cases earlier this week as well. So we're starting to see those numbers certainly creep up. But you talk about the policy priorities, because one of the arguments is that with the new leadership consolidation in place, the execution of policy will actually be more streamlined than ever. So how do you align your portfolio, even while COVID zero is still happening, with that execution?
Yeah, I mean, you're clearly right. I think that's our expectation as well, is that as the zero COVID policy starts to get sort of relaxed, you will also see better implementation of policies, especially after the party congress is concluded. And so we do expect that to sort of flow through into fundamentals. So we do expect China's sort of growth to recover into second half of next year, and maybe the market will start to sort of react onto that in the first quarter of next year as well. So I think the risk reward for China therefore could start to improve. In terms of where you position, as I said, I think you have to sort of be in some of the reopening pockets, which will include the domestic cyclicals in China, as well as the sort of consumer sensitive sectors that are more sensitive to the reopening. At the same time, we have been emphasizing the theme of little giants in China, which is basically the companies which are into the areas of sort of common prosperity, sort of supply chain sufficiency, high tech, which should benefit from so the policy push from the policymakers there. And these are the companies which are still kind of mid to small cap right now, but have the potential to compound at a fairly high rate over the next 3 to 5 years. So that's an area we have been sort of focused on.